How to sell your small business for big bucks. If you are considering selling your business, here are 8 things you should do to make sure the sale process goes smoothly and that you're earning maximum ka-ching from the transaction. Welcome back, folks, to another edition of Sweetie Kiwi. How are you doing today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as superbly as I am, go grab a cup of coffee or tea or a hot cup and let's roll. Now, to sell your small business for big bucks, there are 8 things you need to do. Number 1, hire a due diligence consultant. Now, what is due diligence? It is essentially an investigation into the business or products you're interested in buying, right? So you will conduct your due diligence before the transaction is finalized to verify if the acquisition is worth it. Now, the thing here is that you're not buying the company. You are selling your company, but what you want to do is you want to reverse engineer the due diligence process so you get a report about your own business. That way, you know what potential bidders will see about your company, right? And if there are some issues that you need to fix before putting the business on the market, this is the time to do it, right? Because bidders will perform due diligence before buying your company anyway. So a due diligence incorporates a lot of things. You have people investigate issues relating to the business or the products. I'm talking profits, financial risks, legal issues, potential deal breakers, right? And sometimes due diligence consultants also examine historical records and future projections. All right. So the thing here is it's very important that you do that. So you look at your financial, your legal, your operational, your product, and your human capital aspects of the business to fix anything that should be fixed before you sell the product, you sell your business. Number 2, you want to hire a business broker or investment banker to handle the sale with you. Now, even if you think you have experience, it is very important to understand that some people make a living selling businesses. They flip businesses or they serve as middlemen in business acquisition or sale transactions, right? So even if you think the business is your baby, you've nurtured that baby for the last 20 years or 10 years, and you are kind of emotionally wrapped up into the business, here is an opportunity to recognize the importance of a professional. All right, it's because a banker or a broker will get you a premium price while you keep the business afloat. Right now, you have to understand that business brokers and investment bankers have a deep Rolodex. They work closely with sellers sellers and buyers, by the way, from the moment they decide they want to put their business up for sale, all the way to the transaction, to the closing. All right, and you want to get a broker or an investment banker because they know how much your business can fetch. They have a better price about market trends. They have a better understanding of what's happening, whether the market is hot or not, and they can tell you what's really happening at a particular moment. All right, so you want to really surround yourself with a professional. Now, the only difference between a broker and an investment banker is that sometimes, depending upon the size of the transaction, if you are selling a business for 10 million or 50 million or 100 million, then you want to get an investment banker because they have in-house business brokers. They actually, I would say, they actually provide a larger catalog of services compared to a business broker. All right, so this is one of the differences you want to think about if you are selling a medium-sized or large business, for that matter. Okay, another thing that's very important is that a lot of investment bankers and business brokers, they work to deliver value to both sides in the business transaction, and they know a lot of people. They know a lot of buyers and sellers, having worked on a series of transactions in the last 20 years. And this is why it's very important to get a professional who has done deals before in your industry. All right. Number 3, hire an external auditor to review and certify your business's financial report. Now, An audit is kind of similar to a due diligence report. The difference is that an audit is more financially and operationally focused, right? Because an audit is more it's really an inspection of your business accounts, including accounting systems, documents, and invoices. And the audit aims to determine if the financial statements are accurate, right? So, and the thing here is that you want to make sure you have an auditor look at your books, because having an unqualified audit report by a certified independent auditor will add credibility to your business, will add credibility to the whole transaction. You can charge a premium because the numbers that you're showing to potential bidders, those numbers have been reviewed by an external independent party, right? So you just want to reach out to a local CPA, a certified public accountant, to kind of help you with that. Now, an audit is very beneficial because an audit can help your business identify problems and weaknesses with your accounting systems, and this allows you to improve or eliminate those problems in the future, right? An audit can also help you uncover fraud, right? And fraud can include situations where your staff members or management are stealing money from the company, right? Because an auditor will be able to dig into the books and to see discrepancies and uncover a potential fraud, a potential fraudulent transaction. You can also use an audit to identify poor accounting practices or improve your tax planning. All right. So the whole thing here is that whether you do a due diligence report or an audit report, the goal here is to strengthen the credibility of your company's financial records. Okay. I will be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. If you are doing fantastic, I'm doing fantastic too. Please go ahead and just smash that subscribe button and turn on the notification bell so you are informed the next time we drop a new show. We do this every single day. Comment below, share, like, you know the deal. Number 4, have perfect timing. It is very important to time the sale of your business, right? Because you want to make sure you're selling when the market is hot, right? You don't want to sell in a down market. If we are in a recession, or we are in a larger economic downturn, you know, the market is, the buyers are not there. You have to understand, a lot of buyers borrow to finance small business acquisition. So if the credit markets is frozen, or there's something going on in global financial markets, chances are the money's not there to be used to acquire your business. All right. M&A activity, mergers and acquisition activity, is closely correlated to the business cycle, right? So I'm talking about fluctuations in economic activity, you know, worldwide, and as such, the economy goes through ups and downs, right? You have periods of expansion and periods of contraction, aka recessions. So you want to time the sale of your business perfectly, which is why you want to have professionals on board. You want to have a business broker or an investment banker on board, so they can tell you whether, you know, the time is right, or you should maybe wait a few more months or years. All right. Very important. Number 5, understand what buyers are looking for. If you want to sell your business for big bucks, you got to understand what buyers are looking for, right? It's the same thing as if you are trying to provide services or products to your customers. You have to identify the demand. You have to understand their desires, needs, and wants, right? So a lot of folks buy companies for various reasons, right? And if you can figure out what your buyer wants, you can position yourself to your advantage, really, right? Because basically in the industry, you have several types of acquisition strategies. Some people buy a business for strategic reasons. Others buy for defensive reasons, and others even buy just to generate cash flows, right? Let's say, let me give you an example of a defensive business acquisition. Let's say, your small business is a biggie in the industry. You are the chief rival. So your competitor knows that by buying you, they will dominate the marketplace. Or let's say you have a business that it's just a cash flow. It's just a cash cow rather, and it's a business that just generate cash all year long, and they just buy that business to streamline the processes and cut costs by consolidating, right? So you want to know what your buyer is looking for. Number 6, you want to prepare for a marathon, not a sprint. Now, when it comes to selling a small business or a medium-sized business, we're not talking here about weeks. Sometimes it takes months. It could even take years. We've seen instances in the industry where businesses were acquired after 3 years. So it's not about sprinting here. So you want to be as patient as possible, right? From the time you've hired a business broker or investment banker to the time you prepare the auction, from the time you receive the bids, you evaluate the bids, you talk to the business broker or your investment banker, and deciding the final bid, signing the paperwork, going through the due diligence, and getting the cash into your bank account. This could take a while, and I'm talking from 3 months to 18 months, right? So you want to really be prepared mentally about the lengthiness, if you will, the duration of the transaction. Number 8, make sure you have a profitable business. If you're trying to get big bucks, if you're trying to get some serious ka-ching from the business sale, you better have a business that is worth it, right? So there are a lot of things you can do to increase your profitability, or at least show that your business has a steady, strong history of making money, right? If you have 1 or 2 years in between that they're not, they're all losers, but you have 8 or 9, 20 years of profits, it's okay. All right. So the thing here now, how do you determine if you have a profitable business? You want to analyze your gross and net turnover. I'm talking about sales, gross sales and net sales, right? You want to know your operating cost. You want to figure out exactly what your fixed and variable costs are. And you want to compare the rate of return of your competitors to your own. This is when you are making, you're making the right decisions, or you should change things around. And this is very, very important. All right. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. We are about to wrap up today's show. And I want to say that the last thing you need to do is you want to seek as many bidders as possible. This is very important, because the thing here is that your broker might provide you a list of preliminary bidders, and you might think that the value that they're giving to your company is kind of small. It's normal. If you believe the value is small, then you can basically be comfortable with another list of bidders, right? Even if you go to any auction, you see people get so involved in the thrill of bidding that they end up blowing their budget just to win the contest, right? So your business broker may help increase the number of bidders, or the investment banker, right? Now you have to understand the reason why you want to have as many bidders as possible is that buying and bidding, for that matter, is primarily an emotional process, right? So you can use that drive, you can use that eagerness, you can use that keenness to win to your advantage and to get the big bucks. I don't know if you've ever read the news where you kind of hear about battles between board of directors when they're trying to sell a publicly listed company, and sometimes you have one party comes and makes a bid, and the board of directors reject the bid, and then they have to go back and sort of increase the bid a little bit and come back. And if the corporate directors are not happy with the new price, they just call it quits, right? It's a game, really, because they're trying to attract as many bidders as possible. Now, we're not talking here about billions of dollars changing hands here. We're talking about millions of dollars or even hundreds of thousands of dollars, depending upon the size of your business. But the bottom line here, and you understood what I meant, was to increase the number of bidders. All right. So this is it, folks. Just want to quickly recap today's conversation and sort of talk a little bit more about the next step you should do. So how to sell your small business for big bucks. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. We are about to wrap this up now. Here's a recap. To sell your small business for a big profit, hire a due diligence consultant. Hire a business broker or investment banker to handle the sale with you. Hire an external auditor to review and certify the company's financial reports. Have perfect timing. Understand what buyers are looking for. Prepare for a marathon, not a sprint. Seek as many bidders as possible, and make sure you have a profitable business. And just kind of give you 2 pro tips before we end this conversation. Remember that you make more money if you are in a niche sector, right? If you're providing a unique product or service to a dedicated loyal group of satisfied customers, you are going to cash in big, right? Because it is very hard for a bigger business to swallow you up on the cheap if you're thriving in a niche market. Another way to actually also increase the value of your business to a potential bidder is to make yourself dispensable. In other words, the company can run without you because you have run the company so well. You have put in place solid internal processes and an effective operational framework that the business can run itself, right? So you have added value. So if your business can run without you, it is much more valuable because of the risk. Think of it in terms of risk management. If you are a potential buyer and you know that the owner of the business you're about to acquire plays an important role, you would need to buy that owner. Also, you need to hire or keep that owner on staff, and this sort of decrease the value of the business. So make sure you are dispensable. You are not needed in the company. All right. I will see you another time. And until then, remember, stay marvelous.